Liberty Holdings is next. We're talking about the life insurers, Nesan Nair and myself, and we're talking here about a company that's controlled by Standard Bank. We know. They also have StanLib, the asset management operator, in there. They had a CEO replacement recently, and this one looked like a case where the board had lost confidence in the CEO, and so it had to, new guy get sent in from the bank, Dave Monroe, that is. Market capitalization, let's have a look at that. 31.6 billion rand. Price to earnings ratio 15.52. Dividend yield of 6.24 based on its previous payouts. But you can see the share chart looks grim, and that's because they've been perceived to be a bit of a dead duck. They don't have a loyalty program. They've had a runoff of policies. Their asset management performance in StanLib hasn't been that great.
Yeah, if whatever's out there, I think Liberty caught it. If you can put it that way. I think the biggest concern is that Liberty's traditional client base is, the affluent investor, and you actually mentioned it earlier on. People are not really investing that much money in these single premium investments any longer. So the Liberty is going to have to reinvent itself, and try and grow in the areas that Sanlam and Old Mutual have.
Ironically, 15 years ago, they used to have the position in the mind of the investing public that Discovery has now. They were the innovator. They came with new policies. They had the best sales force. They had the cutest products. Now they're seen as a sort of an also-ran, and they're losing ground.
Yeah, and it doesn't help when your investment performance is weak, and when your market is being attacked by the likes of a Discovery, we're just churning out better and better products all the time.
So Dave Monroe has been sent in. He's a clear-eyed investment banker guy, one of the key sort of lieutenants in the Standard Bank team. So he's a Mr. Fix-It, right? So his first thing is going to be just sorting it out, taking out layers where there's been costs and problems, and just trying to stabilizing the ship. The question remains is whether he has the vision to create something new and to win back the market share.
Yeah, so I mean, for me, the problem is not really so much with costs. Costs are there, and you'll address costs on an ongoing basis. It's really, how do you deal with things like persistency? Making sure that your customers don't leave you and go off and buy a Discovery product. How do you deal with lapses? Ensuring that in these sort of times, people are keeping up with their premiums.
And part of that is through incentivizing your broker force, but I mean, brokers themselves can also get a little bit tired of selling products which don't perform well. So
he's going to really have to apply his mind to how to.
So hot or not?
For me, for the time being, not hot, no.
Yeah, I must say I'm going to take the same view. I like the guys, but I've got a view that it's going to take a while to turn that ship around and get it revved up and going.